You're welcome to another interesting edition of the Economy and Politics Show, where we discuss key socio-economic developments as it affects households. Today, our conversation will be on the review of the September 2022 inflation and implications for households. My guest is Mr. AbdulQudus Isiaka, Senior Economist with Proshare. Nice to have you once again, Mr. AbdulQudus Isiaka, on the show.
Thank you for having me.
Great to have you. To our viewers, before we begin the conversation, let us give you some key stories from last week. According to the National Bureau of Statistics, headline inflation in Nigeria rose to 20.77% in September 2022 from 20.52% in August 2022. Food inflation also continued the upward trajectory as it increased to 23.34% from 23.31% in August. According to reports, Nigeria plans to convert 20 trillion naira loans taken from the central bank Ways and Means to 40-year bonds at a 9% interest rate. It will be added to the official debt figures currently at 42.84 trillion naira as of June 30, 2022. The funds accumulated gradually from the 2015 era when federal government opted for loans to cover the government expenditure after revenues collapsed on lower oil prices and production. President Muhammadu Buhari last week signed into law the Startup Bill 2022 at the Presidential Villa at Aso Abuja. In a statement issued by the Minister of Communications and Digital Economy, Professor Issa Ali Pantami, this would be a game changer for the technology industry. And those are some of the key stories from last week. If you're joining us, it's the Economy and Politics Show, and our conversation is on the September 2022 inflation and implications for the households. And my guest is Mr. AbdulQudus Isiaka, Senior Economist, Proshare. AbdulQudus, once again, thank you for being part of the show.
Thank you for having me.
Yeah, very well. So let's first begin with the figure for inflation rate. It's rising. It's 20.77% in September from 20.5 to what was obtainable in August. What do you make out of this CPI headline inflation, and what are the major drivers in Nigeria? As you can see what's happening already in Europe, some countries have not even reached double-digit levels, over 9-8%, and they're already beginning to protest. UK hit 10.1% too, and a major concern with, again, internal change in governments.
As you rightly mentioned, inflation surged to a new 17-year high, 20.77% in the month of September, and that brings inflation for the 8-month period on average to about 17.92%, which is considerably higher than the 16.98% we recorded last year on average in 2021. And that kind of suggests that we've had fairly higher levels of inflation this year. Food inflation, core component of inflation, also have been at record highs. In September, we saw food inflation inch higher to 23.34%. We saw core inflation inch higher also to 17.43%. And so, you're looking at a situation where inflation is really spiraling. But there indeed is a silver lining in the month-on-month data, right? So we noted that, month-on-month inflation, the headline component, as well as the food and core component, also kind of continued their moderation in the month of September. So we saw it come down from 1.82% in June and July, respectively, to 1.77% in August, and now it's dropped considerably to 1.36%, suggesting that we're seeing the price growth. We're seeing the pace of price growth on a month-on-month basis slow, and some analysts have kind of attributed that to some of the cumulative impact of the monetary policy actions that the CBN has undertaken in the last 5 months. We've seen the CBN raise rates by a total of 450 basis points since May, and most recently did raise rates by about
450 basis points.
The CRR, I meant to say the cash reserve requirement, by 500 basis points. And even while the most recent
that CRR is massive.
Yeah, even though the most recent increase in the base rates by 150 basis points, as well as the 500 basis point upward revision of the CRR, may not necessarily, in fact, may not have, they didn't contribute at all to this downward trajectory that we've identified in the movement of month-on-month inflation. But in trying to identify some of the more core fundamental factors responsible for the upward trend in inflation, on a year-on-year basis. You want to look at such factors as, the structural problems that we've had that have induced supply shocks over time. You want to look at factors such as, infrastructural deficit issues, electricity, transportation, rail network, road, and some of the cargo clearing logistics at the port, insecurity being also a major factor, and now flooding, which seems to compound, some of these problems.
Yeah.
And really, I think that this flooding scenario is almost as serious a humanitarian crisis as the insecurity challenge we've had in the last 10 years.
Yes.
And I think that it's going to definitely have an impact on food prices going forward.
Yeah.
But let's look at the global dimension of things. In September, in the month of September, we saw the prices of the two contracts, WTI and Brent, actually moderate. We saw it reduced to around $85 to $86 per barrel towards the end of September. And that was partly due to the concerns of recession in the West, as well as a reduced demand from China due to the zero COVID policy. You also want to project that the recent decision by OPEC to cut production by 2 million barrels per day is going to send prices rising. So even though in September we saw a moderation in prices of crude oil, I think we project actually that prices are going to rise going forward.
Yeah.
And that, on the one hand, we also saw a moderation in global food index. We saw prices of corn, wheat, sorghum, barley, almost every major grain also moderate in the period of September. Now, on the flip side and looking forward, we think that the recent escalation of conflict between Russia and Ukraine is going to sort of put paid to some of the aspirations and the ambitious projections we had made when the Black Sea was reopened.
High inflation is not just a Nigeria thing. Look at what is happening in Ghana now, our neighbor. It's risen to 37.2%. Consumer confidence is waning now. And I saw a video of Ghanaians locking their shops at a point saying things are really tight. But generally, what are the implications of this for households in Nigeria? And as we see this even happen across our sub-region?
Okay, so as you rightly pointed out, inflation in Ghana rose for the 16th consecutive month to 37.2%, up from 33.9%. The PPI inflation also rose to 45.6%, up from 39.7%. And that kind of suggests that we'll continue to see inflation at the consumer's end continue to rise. You want to imagine that producers would continue to pass on this inflationary tax burden onto consumers, and so it doesn't bode well for the households. Essentially, we're looking at all of this play out despite the rise in base rates. The central bank in Ghana has raised rates most recently by 250 basis points, bringing it up to a 5-year high of 24.5%. But the problem in Ghana is a balance of payment problem. We're seeing a situation where high debt levels and high debt service costs is shutting the Ghanaian government out of the international, if you like, the global debt market. And that, at this point in time, has led to a situation where, even Fitch has downgraded the rating of Ghana to CC, which is a lot more like a junk rating. If you look at the reserves of Ghana also, it gives you an idea of how severe the situation is. Last year, September 2021, they had $10 billion in their reserves. As we speak, as of September, end of September, they had just a little above $6 billion, which shows how much pressure the reserves have come under, and consequently, you can imagine that the exchange rate or the value of the cities would also be adversely impacted. And so we've seen,
which is why the cities was reported to be a worst performing currency.
So it has lost 72% of its value against the dollar since the beginning of the year. So all of that kind of explains, the situation in Ghana. But what are the implications for the households?
Yes, and you do belong to Nigeria too.
Exactly.
Yeah.
So the implications for the households, whether in Ghana or in Nigeria, inflation tends to erode purchasing power.
Yeah.
In Ghana, we're looking at 37.2% headline inflation. It means that between September 2021 and 2022, there has been a reduction of 37.2% of purchasing power. That's massive. And that's one. Number two is you also look at the dimensions, the implications for idle cash keepers. So if you put, based on the 70 rule, if you put 500 cedis in a piggy bank, in less than 2 years, it will be worth only 250 cedis in less than 2 years. Yeah. So that's also a problem. Then for investors also, the Ghanaian, the yield on the 364-day GTB or Ghanaian Treasury bill is just around 32.2%. It's high. It's relatively high if you compare it to the yield on the Nigerian 364-day Treasury bill. Yeah. But then it still lags the inflation rate of 37.2% in Ghana, which means there is a negative real rate of real return for investors. Then again, you want to consider the implications for manufacturers. The interesting thing is that in all of this, amidst all of this, we've seen the manufacturing sector, contributes considerably to real GDP growth. It did grow by 8.8% in the second quarter, supporting the Ghanaian economy to a 4.4% growth in that quarter. So if this particular spate of inflation persists, it's likely that manufacturers would have to close shop and close factories, disengage their staff, and we see a situation where the economy itself tanks.
So that also applies to Nigeria, to where manufacturers, and that's why I think the federal government recently said they want to look at creating a special foreign exchange window just to address the challenge of manufacturers. Wow.
Precisely.
So purchasing power is going to be affected. Even when you're saving, a lot of us try to save money, the value has even reduced. And you've talked about the fact that the manufacturers would face those challenges generally. So, people have to just be very creative in surviving this terrain. Africans seem to be stronger, but the Europeans, the pressure points to resist it is different on the streets protesting. That's very interesting. But let's look at the federal government's actual fiscal deficit, because again, this goes to how this manages socioeconomic indicators like inflation. It is, as of August, was 5.33 trillion naira. And by how much do you think this would have contributed to inflation that we've seen over the period?
Well, we saw the Minister of Finance, Budget and National Planning during the ministerial presentation of the 2023 budget take the opportunity to, give us an idea of what budget performance has been between January and August. And that kind of threw up some interesting figures and generated a lot of discussions. So we saw revenue performance of about 64%, saw a 36% underperformance. Targeted revenue over the 8 month period, was 6.56 trillion naira, and what was generated was just about 4.23 trillion naira, which is a massive shortfall. And the shortfall was due essentially to a 27% performance of oil proceeds, which raises the issue of oil theft,
which Proshare has been a big advocate.
Exactly. But aside that, we understand that the deficit came in at 5.33 trillion naira, which is around 460 billion naira higher than what was targeted for that period. So generally, we know that the federal government is priced out of the Eurobond market. We also know that monetary policy normalization in the West has meant that many investors will begin to look for higher yields elsewhere. And so the sentiments towards investing in federal government bonds and issuances generally is not is not quite in our favor. It's not so much. And so, the implications of that is that, the federal government would have to make a recourse to ways and means financing. And ways and means financing is like an overdraft.
That came under scrutiny. You heard what the former central bank governor said. I mean, there's a limit, but it's seemingly like the limit has been stretched.
The CBN Act stipulates that, the central bank must finance the federal government only to a certain limit of revenue generated in the previous year. And even when that is done, you must settle the overdraft. You must settle the overdraft before you go ahead to incur subsequent fiscal years. And so we haven't seen the central bank or the federal government comply with that particular act, but that's a separate discussion. What we can say for certain is that overdrafts or ways and means financing, such as we have seen the government make recourse to significantly and substantially over the years, is very inflationary, because essentially you are printing money and you are not necessarily generating you're not generating value, and that raises the issue of money stock. Money stock over the years, as the growth in money stock has exceeded, the growth in the real sector. We saw between June 2021 and June 2022, money stock rise by 24%. The real sector has grown by only 3.56% or thereabout, and that shows by how much. Exactly, that shows by how much much more money in circulation is chasing only few goods, and it also leads to a frivolous demand for FX. And so, the FX challenge is also another discussion on its own. Dealing with the FX problem, I would say the central bank needs to rejig its policy. It needs to close the gap, between the parallel market rates and the official window, the rate at the official window. And to do that, we would recommend that the central bank considers the crawling peg, exchange rate policy, which would see the central bank. It would see the central bank. Devalue the naira against the dollar at the long run inflation rate of the country. So we put that at around 12.3% based on Nigeria's long run inflation rate. So if we add a devaluation, we would see a close. We see the gap between the two rates closed, and that shuts out the incentives for rent seekers who want to arbitrage or who want to round trip.
Okay, I mean, Kudus, you've dropped a very strong point, and I think that will cause for another conversation, because inflation is rising, but the fiscal and monetary approach to it is very critical at this time, not just Nigeria but globally. And we hope that there will be that, like Vice President Sibanjo will always say, that coordination between fiscal and monetary policy to really address the impact of inflation. But thank you so much for your very fresh insights on how this is going to affect households, and definitely there's a way to navigate this, and the time is now. Thank you, Mr. AbdulQudus Isiaka, Senior Economist, Proshare, for this conversation. Thank you.
Thank you for having me.
Thank you very, very much. And to our viewers, Nigeria is witnessing its worst flooding in a decade, as over 600 people have lost their lives this year due to the environmental disaster. States like Kogi, Anambra, Nasarawa, Delta, Niger, and Bayelsa are among the worst hit by the floods. This has posed significant concerns around agribusiness and a likely increase in price of foodstuffs. I am calling for a coalition against flooding disasters in Nigeria, CAFOIN, where the government, private sector, and faith-based organizations, amongst others, can come together and mobilize at least 30 billion naira to provide relief to the victims of the flood across the country. We did it during COVID. We can do it again. And that will be all for this edition of the Economy and Politics Show. You can follow our social media platforms to get updates on the developments in the socio-economic space, and visit our website, www.proshare.co, to read our latest news stories, articles, reports, and watch our videos around the current inflation developments. Also, our crude oil theft report is still available for grabs. Just follow the instructions and inquiries for it displayed on the screen, and also log on to our website to get further updates. Till we come your way again, thank you for watching and have a lovely day.